What's happening, everybody? This is Crushing Crypto, where we show you how we're crushing crypto so you can crush it as well. And today we have one of the top gentlemen that's leading Bitcoin Gold on with us right now. His name is Ed Iskra, and it's Polish, so I pronounce it. I do the Iskra. Is that correct? Is that how I pronounce it?
Perfect. Yeah.
Iskra, nice, excellent. So Ed, thank you so much for being on with us today. Looking forward to this interview. And for everyone that's listening, one of the things that that I shared, if you listen to any of our other shows, is that you can have an amazing idea, you can have amazing technology, you can have the most beautiful, well-written white paper, but if you don't have a team that can actually take action and execute on the goals, all of those goals just stay there as goals. And so what we're going to do is really learn more about what Bitcoin Gold is, how it differs from Bitcoin, and just really learn more about what it took to get it started and kind of what the future is. So Ed, for somebody that doesn't know anything about Bitcoin Gold, B Gold as you say that some people call it as well. Can you kind of go a little bit more into, how would you kind of sum it up in a high level? What is Bitcoin Gold?
Sure. And you tell me where you want me to dive in more, because I don't want to start diving too deep, because I can go on. Online, I'm known as the mental nomad. I'll tend to sort of digress. So
all right.
Bitcoin Gold was started by a couple of people who were looking at what's going on in Bitcoin in 2017. Going into the summer with the contention between the big blockers and the SegWit proponents. And the concern was that there's a lot of power, there's a lot of centralization that's gone to the people in control of the ASIC mining. From the perspective of the people who started Bitcoin Gold, ASICs are a centralizing influence, and they wanted to see what would happen if a version of Bitcoin stood up which was free of ASIC mining. So the idea was to fork the entire blockchain. The entire blockchain was copied, fork the Bitcoin code, but change the proof of work algorithm so that it's mined by GPUs instead of ASICs. That's the fundamental concept behind Bitcoin Gold, or BTG. I'll say BTG for quickness.
Excellent. And real quick, can you go through, some of our folks are brand new, just for people that don't know what the difference between the two are, can you kind of go through real quick the different types that the two that you mentioned?
Sure. So Bitcoin, people are more familiar with. Bitcoin Gold is going to be identical in most aspects. So we're based on the Bitcoin code. We have the exact same existing float, the existing coin supply as Bitcoin as of October 25th, 2017. We use the exact same kind of blockchain, the same 10-minute interval, the same 12.5 coins mining rewards per block. It's also the same financial model. We'll have the same 21 million maximum coins. So we have the same inflation rate as Bitcoin, a nice low under 3.7 right now. We don't take any fraction of the mining rewards for the team. Instead, we funded the team with a short period of mining, which funded an endowment. That endowment is 100,000 coins. We can talk more about that later. So at the time, that was less than 0.5% of the existing float, and there is no incoming revenue beyond that. So all mining rewards go to people who choose to mine, and nothing is taken from people who choose to own the coin. If you buy the coin, there's no additional inflation because of us taking any sort of founder reward or diverting anything to masternodes or to the team or anything like that.
Got it.
The main differences.
Can you go through the different mining? You said you mentioned that those were the main things. So as far as the actual machines, for people that aren't familiar with those type of the different ways that people can mine.
Right. So there are three big differences between Bitcoin and Bitcoin Gold, and the most important one is the fact that you can't mine it with an ASIC. Now, an ASIC, it's basically just a piece of specialty hardware. The ASIC is a piece of hardware which in the Bitcoin space means you buy it from most likely a Chinese company. It costs thousands of dollars and it takes weeks or months to arrive. And in the past with many companies, you'd be lucky if it arrived, or depending on where you are in the world, it may get intercepted. So these are very expensive and they can only do one thing, and that's an algorithm called SHA-256. It just mines Bitcoin with this algorithm. So when only one company is selling the vast majority of these, and everyone who has one of these expensive items is collecting all the coin, it's sort of centralizing. The original Bitcoin concept, everybody who had some Bitcoin, who had a wallet, could also mine with their computer at home. You can't do that if you need a piece of specialty hardware that's hard to get and controlled by a small number of people. So we use a different algorithm. Instead of SHA-256, we use something called Equihash. Equihash was designed to be an algorithm that can't be run on an ASIC, but it can run on a conventional graphics card. So a graphics card, just like you could buy in any computer store, if it has enough memory, you can't use the world's oldest graphics card, but modern graphics cards can run Equihash, so you can mine Bitcoin Gold and some other coins using your graphics card in your computer, or people do specialty machines for mining, so they get motherboards that support multiple graphics cards so they can mine more. They draw more electricity, throw more heat, but they can mine more. Now, there are a couple of different versions of Equihash, and this is something that most people are not aware of. The original version of Equihash that we use was sort of the standard across the industry. It's Equihash with the parameters 200,9, which is going to consume about 140 megs of RAM, which was at one point too much for an ASIC miner. Recently, just this 2 months ago, Bitmain began selling an ASIC miner that can mine Equihash. There are multiple coins which were on Equihash.
Okay, I was going to tell you, can you explain again what Equihash is? Can you share that to the folks?
So Equihash is an algorithm which was designed to resist ASICs, and it was designed to be memory hard. Basically, it requires so much memory that you can't create a specialty chip that can do it. Instead, you need something that's a general purpose piece of hardware that has a processor and a lot of memory, like a graphics card. That's why it can work on a graphics card. But the exact implementation of ASIC makes a big difference. So the original implementation, as started by Zcash and as adopted by Bitcoin Gold last year, requires about 140 megs of memory. And these days, we've learned that you can do that on a single chip miner, on an ASIC miner, because Bitmain has started selling them. They announced them in the beginning of May and said they'd be arriving by the end of June. So when Bitmain announced this, we also announced that we're going to change our algorithm. We're going to use a different implementation of Equihash. The new one is called 144,5. We call it Equihash BTG. This version requires well over 2 gigs of VRAM on your video card. So it can't be squeezed onto a single chip. Now, we've already had the opportunity to literally see the insides of the new Equihash mining chip. Some people in the coin space that we work with literally slice the thing open and put it under a microscope. There's pictures on a forum if people want to look at it. But we confirmed it has 144 megs of RAM on a chip. That's enough to do the old Equihash. It's not enough to do the Equihash that we're going to be deploying in just 4 days from now. The upgrade is going to happen as a hard fork. It's scheduled for block 536200, which is only 600 blocks away at this point, because blocks come about every 10 minutes on our chain, just like Bitcoin. So that's 4 days, 2 business days. Our partners are hard at work getting back to us to confirm that they're ready for it. So this means upgrades for mining software, for mining pools, for exchanges, for explorers, for services, and everybody who runs the full Bitcoin Core wallet needs to update that too. And all of those informations, links, details, guides, they're all available through our website and on our GitHub.
Got it. Excellent. So what was the main reason then why you guys decided to fork? It was a centralization issue. Is that really what it came to? And then at what point were you guys kind of got together and realized this and said, you know what, we can produce something that we feel is better essentially, or at least more centralized?
Yeah, it is absolutely the concern over centralization. In fact, at the time of the genesis, the first founder of BTG was Jack Liao from Lightning ASIC. And he was thinking about this in spring of 2017. Not only was the contention going on, but also you may remember August 1st, Bitcoin Cash forked, and they started their chain split in their alternative version of Bitcoin. When that happened, Jack felt, if it can be done like that, it could also be done in a more friendly manner. You could also stand up a completely separate blockchain mining with different hardware and get away from this control by the ASIC miners. So he put together a team. He put together a core group of 6 people who were involved in creating the concept, putting out our white paper, which was called a roadmap at the time, getting the code together, prepping. The fork initially happened on October 25th in terms of the blockchain copy, and we deployed and launched the new network on November 12th of 2017, and it's been running ever since. The only changes we made to the underlying Bitcoin code, we preserved everything, including SegWit. We didn't go stripping that out. The only things we changed are the algorithm for mining to get away from that centralization and let anyone in the world mine with the GPU without having to buy extra hardware. 2, we changed the address format so that it looks different. We heard horror stories of people confusing this kind versus that kind because people are using the same addressing as Bitcoin. Ours are different. They start with different letters, no confusion. And the third thing was just adding replay protection. And I won't get too technical, but basically replay protection ensures that you can't use a Bitcoin Gold transaction to replay it on the Bitcoin chain, potentially snatching coins from someone who doesn't expect, or vice versa, to replay a Bitcoin transaction on the Bitcoin Gold chain. So we had full replay protection from the first day that the coin launched on November 12th. We've been picked up by a large number of large exchanges. When I last checked, we're on more than 50 exchanges with well over 100 market pairs. We've got plenty of pools out there. We have a stable mining community. It's been well adopted and going well. Now, of course, our price has suffered during the recent crypto bear market, as everyone's has. We've also had some downward pressure on our price because there are large institutional holders of Bitcoin. For example, a Bitcoin-only fund like Grayscale. They were obligated to divest themselves of their forked coins from a Bitcoin Gold, from a Bitcoin Cash, etc. So the sell-off of the Bitcoin Gold put some downward pressure on their price. Also, Zappo liquidated all of their Bitcoin Gold. They allowed people to withdraw, but then in the middle of June, they liquidated the remainder. I think that's finished now. I wouldn't expect that they're still doing that. There's things like the Mt. Gox coin liquidation. They obviously, everybody who held Bitcoin before October held Bitcoin Gold after November. So anyone who had an obligation to divest has probably done so. So those were all downward pressures on our price. We believe the great majority of that is behind us. And at this point, we should be free to float naturally. So when the recovery in the crypto markets come, which I hope starts about 5 minutes ago,
right,
our coin should be ready to recover along with the rest of the world.
Got it. Excellent. And so as far as, you have some, detractors, not just with Bitcoin Gold, but with any forks of Bitcoin, these purists that say, by you forking it, by creating another Bitcoin, that in a way it kind of dilutes the entire Bitcoin name. And so while there's only 21 million Bitcoin, there's only 21 Bitcoin Gold, there's now, additional that there's only that amount for that specific fork. But anytime that someone forks an additional chain of Bitcoin, if they choose to have that same amount, they're essentially diluting in a way the Bitcoin blockchain, so to say. What would you say to those type of detractors that say, there's only one Bitcoin, there's all these people that are kind of forking it, they're doing it for selfish reasons. They believe that there's gigantic opportunity, not just they're using a certain thing like a benefit like less centralization, but in reality it can be a way for the people who are involved in the project to essentially a money grab.
Right. So you hit a couple of things there. So I need to reply to many of them. First off, yes, there is the unfortunate fact that using the Bitcoin name it creates some confusion. I'm spending a lot of my time explaining the difference between Bitcoin and Bitcoin Gold to people. So I fully appreciate the confusion. But on the other hand, we have always been clear that we're Bitcoin Gold, BTG. Some people call us B Gold. We have never said we are the real Bitcoin or we're a better Bitcoin. No, we are a version of Bitcoin which is doing things slightly differently. And we've been working hard to be what we call a friendly fork. We've been cooperating with a lot of other coin teams, including specifically on this Equihash problem that we've had lately, but on a variety of subjects. We're trying to promote the crypto space, crypto industries. We're working with merchants and adoption programs across crypto, not just for Bitcoin Gold. Now, speaking to the money grab idea, I fully appreciate the concerns people have that these forks might be money grabs, because there were so many Bitcoin forks in the end of 2017. It was a ridiculous avalanche. But we did have a real reason to fork. And I'd like to mention, not every fork creates a new coin. I know that in 2017, people thought fork means new coin. A fork in the code world, it just means a copy and change, and then you end up having two directions to go. It doesn't mean there's always a new coin. So with our upcoming fork in 4 days, there will not be a new coin created. That's just a network upgrade. But talking about all those forks, some of them were money grabs. I mean, to me, one of the signs that something might be a money grab is if they're going to fork a coin that has a huge supply but a low price, and then do an airdrop to something like Bitcoin. Because then they're distributing things and they create a large total amount of currency out there, a large total number of coins, but most of them come from the Bitcoin side of things, and they could have purchased a lot of whatever they forked at a very low price and then pretend they have this huge market cap because of all those Bitcoins. We didn't play any of those games. We copied the entire Bitcoin blockchain, 15.5 million coins at the time, and everybody who had a Bitcoin now has a Bitcoin Gold. Not we have them, not we control them. Everybody who had one has one. We did mine an endowment to support the project. That was just 100,000 coins. That's 0.5% of the supply. And we have the same future cap as Bitcoin, 21 million. So there's no way to pull off a huge money grab. Now that endowment, it's multi-sig locked. The 6 core members, it's 4 of 6 private keys required to disperse any funds. So with 4 of 6 locks, nobody can run off with the coin. It has to be a near consensus decision among those individuals. And what's more, the majority of that endowment, 60%, was mined directly into time-locked wallets. It can't be touched until time passes. That stuff will unlock over the course of 36 months. So the coins were not available to trade, and if someone did try to run off with them, they would need the agreement of several other people in the core team. It's just not possible. And what's more, it's completely transparent. The mining to fund the endowment wallets happened on November 12th in public. It's on the blockchain. Everybody can see that the coins are mostly still there. So there's been no coin grab. There's been no money grab. There's no artificial inflation of the coin supply, because it is literally the same coin supply as Bitcoin at the start of the project. There's just no opportunity for this money grab.
Got it. So you're saying by the way that you guys actually set it all up, that with the endowment and with the wallets, that it's not possible based on the way that you guys decided to create it. And part of that was to have that type of transparency, and so that people didn't think that, they didn't make that type of assumption. And so you guys almost looked at it ahead of time before you launched it and created certain things so that people, once, if they really understood what Bitcoin Gold was all about, that they couldn't say that because the facts just don't allow it, is what you're saying.
That's right. That's right. The facts of how the endowment mining happened are in the code. It's enforced by the consensus code in the GitHub. It's all free, public, and open source. And the results are in the blockchain, which is also public and open source. Anybody who really cares about the truth can look at it and see that we haven't stolen any coins, we didn't grab any coins. It's all exactly as we said. Now, of course, there are detractors. We expect detractors. In the altcoin world, people are slamming each other all the time. And we understand that Bitcoin maximalists, many of them are very against any dilution of the coin or dilution of the brand. And on dilution of the brand, I guess we bear some guilt. We use the Bitcoin name and some people are confused. But dilution of a coin, I'll push back a little on that. Is the US dollar devalued because there's a Canadian dollar? When the Australians put out more Australian dollars, is the value of the US dollar impacted? No, these are different currencies. Now, we're not in the fiat world, we're in the crypto world, but we are a separate currency. We are traded separately on exchanges. Anyone who feels there's a difference in value relative to the actual prices on the exchanges is free to trade. The market decides the values, not the supply of something else. Bitcoin supply is fixed, market decides Bitcoin price. BTG's supply is fixed, market decides BTG price. And I don't really see them affecting each other.
Got it. So with that being in mind, if the main feature that you guys have is the being less centralized and by allowing essentially anybody to mine Bitcoin Gold, what would you say as far as the benefits of what you guys have versus a Bcash? So what you're saying, for instance, Bitcoin Cash, they claim, faster transaction speed. Are you looking at Bitcoin Gold? And maybe one of the reasons why you named it gold, are you looking at it more as a store of value as opposed to something that is going to be used as currency?
Well, the Bitcoin Gold name came from the initial name of the project. The first name of the project was BTC GPU. So it was Bitcoin GPU because of the graphics cards. And then we realized it's going to be BTG on the exchanges, and everybody talking about BTG, they, store of value gold. People started calling Bitcoin Gold, and then that sort of stuck. Personally, I came to the project late. I came after the launch. But to be honest, I wouldn't have chosen that because people find it too confusing. I mean, you search on Bitcoin, you search on gold, two completely separate subjects. You search on Bitcoin Gold, it's just confusing. But that's not my call to make. So we didn't say name gold because it's gold. It was graphic cards. But going back, what was the rest of your question? I'm sorry.
So the question as far as whether you guys look at yourself as being more of a store of value like gold, like what people say Bitcoin, is more as opposed to, other currencies that are out there that, boast, thousands of transactions per second and all these other different types of features, just how you guys kind of consider yourselves.
Okay. And you asked a little bit in reference to Bitcoin Cash as well. So we are not trying to build a store of value. We're not trying to build a solely transactional currency. We're trying to provide a version of Bitcoin that has some of the original advantages of Bitcoin. If you remember in the early days of Bitcoin, if you had a computer with a wallet, it also was the software to do the mining. So you were a miner, you were a user, you were a holder. It's one group of people. And that means that the mining rewards were going out to the group of holders and users. That created network effects. The coin distribution was going out to all of the holders and users. In our mining world, that's happening again. We get the network effects of miners who might only have one graphics card. Maybe a miner is someone who's a gamer during the day and lets it mine at night. But then they have a little Bitcoin Gold, which they can hold if they think it's a good store of value, or they can buy things with it. We don't have any concerns about not being able to scale or do a lot of transactions per minute or per second. But quite honestly, we support Lightning Network. Our preview of Lightning Network is due to come out in a couple of weeks. We've already got it working in testnet. We've seen multi-node transactions. It's looking great. We kept all of SegWit, so we're not limited to a 1 megabyte block. We can scale up to something like 3-4 megabytes, just like Bitcoin. We plan to support cross-chain atomic swaps with coins like Bitcoin and Litecoin and others. We're working to become part of this ecosystem. We're going to help support the developers who work in this space. And honestly, I think it's very important for individuals to remain capable of running a full node and validating blocks themselves. That's something that's going to go away under Bitcoin Cash. if these blocks ever become as big as their block limit, because they like to say they have 32 megabyte blocks, but in reality they have a 32 megabyte block limit. Their actual blocks are dramatically smaller than Bitcoin's. But when the blocks grow big and people try to transact as many transactions as they think might fit there, individuals' computers won't be able to validate this anymore. They won't be able to keep up. Not everything scales. People think about size of blockchain, and 32 megs sounds very small these days, but it's not about what fits on the hard drive. It's about how quickly this stuff can get into your network pipes, especially if you're in a remote part of the world. I was just on another call with people talking about the problems in Venezuela, talking about the problems in Zimbabwe and the adoption of Bitcoin in those places. You get a lot less bandwidth. And there are things that don't scale at all. Network latency has not improved much in the past, 20 years? Because, that's just how fast electricity moves. That's the speed of light. So not everything is going to scale with the rate of speed that we see scaling in the size of a hard drive. It's not very computer savvy to think that anything can scale. So you really have to think these things through. Now, the way that Bitcoin is planning to scale, Lightning Network, second layer networks, this is going to be something that can achieve massive scales in comparison and will preserve some of the local community and network effects that come from people interacting with each other, but at the same time preserve a lot of privacy. Remember, anything that settles on the blockchain in a Bitcoin style is traceable. It's pseudonymous because you don't always know who the wallets are, but the wallets and the transfers are all right on the chain. In Lightning Network, that happens between individuals. The initial opening of the transaction and closing of that channel, that goes on the blockchain. But all the individual transactions internally, the small instantaneous transactions with extraordinarily low fees, that all happens on the Lightning Network side between individuals, and it doesn't all have to be reported. And most importantly, it doesn't all have to be tracked on every full node in the world. If you want to support thousands of transactions per second in China, you don't need to record every one of those transactions on a server in New York. And at the same time, do thousands per second in New York, 50,000 transactions per second in New York. You don't need to record all of those in Europe. This is what Lightning Networks allows cryptocurrencies to do. That's why I think that is definitely the way to achieve real massive scale and allow real micropayments at truly micro cost. I don't think a huge block is the best solution for the system.
Okay, so you see both, just like what Bitcoin, purists say, that it can be both. It can be both a transactional currency and a store of value. Do you foresee that any other types of improvements, any type of other upgrades that Bitcoin decides to do? Do you feel like that's just something that you guys will then, incorporate into what you guys are doing, or do you feel like it's going to be kind of if there's other things that are done, that you'll take it as a take it one at a time, so to say, that you won't, it's not necessarily like everything that they're going to do, we're going to upgrade, we're going to follow along with that. What's your thoughts on that?
Okay, so it's not, we can't assume that we're going to do everything that Bitcoin chooses to do in the future. However, that being said, remember, the people who started Bitcoin Gold were of the mindset of the Bitcoin people. They were Bitcoin maximalists, except that they wanted to get away from the centralization and restore the mining. So our intent right now, for everything we're aware that Bitcoin is doing, is to go along and do the same. So as they're developing things like Lightning Network, or other parties are developing Lightning Network, we intend to do the same. We're going to have Schnorr nodes. We've got Bech32 addresses because we have SegWit. So there's an extraordinary amount of similarity. Part of that is to also keep it simple for people implementing things using BTG. We didn't want to create something new and put a lot of new demands on people. And that's part of why we got such broad adoption initially. We wouldn't be on 50+ exchanges so quickly if they all had to work with some completely new unknown system. Or for that matter, if there was a fear that we would be, some blend of ICO and utility token. A lot of exchanges have regulatory concerns, or if they are off regulation now, they think they might be in the future. They're going to shy away from things that are total privacy coins, total ICOs. We are not. We are very much like Bitcoin, and they know the answer to that question, so it's easier to work with us. So we do want to stay similar, but we'll be developing new things. Right now, our governance model really is that we have a small board that carefully considers things and makes decisions. In the future, we want to have more honest, natural, distributed governance, decentralized governance. And we're going to be looking into ways to get that governance onto the blockchain if we can. What form that will take, that's a lot of discussion that's going to happen within our community. And we have a big community. We have well over 100,000 people checking in with us regularly on Twitter, on Discord, on Telegram, on our forums. And we listen to those people. We talk to them, we listen to them, we have discussions. What we'll be doing a year from now, I can't tell you with any certainty. But right now, there's nothing that the Bitcoin team is doing that we radically disagree with. You know, they're having conversations, working out what they think is the right way to go. We largely agree with the consensus that they come to, so we'll be largely going in the same direction.
Go in the same direction. Got it. And however, saying though that there might be ways, whether it's governance or other paths that you guys decide to take that maybe Bitcoin doesn't decide to take. So it's kind of saying that, you know, we'll decide, we're going to go along with the flow as long as it, you know, goes along with what we believe and what the overall goals of Bitcoin Gold are. And in addition, we might also do our, you know, if we have an idea for things that we feel that could bring more value to the overall, to Bitcoin Gold, that you would go that way as well, that you guys aren't necessarily tying yourselves to Bitcoin. You're saying, hey, we're going to innovate, and yet we'll also follow, you know, any type of good ideas that Bitcoin's doing, because why change something if they, you know, there's lots of smart developers obviously on Bitcoin. So why ignore great improvements if they have it? Go with the flow as long as it follows along, and create your own features as long as it moves or propels the overall goals of Bitcoin Gold.
That's exactly right. That's exactly right. With the one addition that we can also be considered a test bed. You know, there are things that are a little more difficult to experiment with on Bitcoin because the transaction fees are a little higher. Or if you want to do an experiment that creates a lot of volume, you know, there is more congestion on the blockchain because it's so heavily used.
Sure.
So you know, we're an option if people want to use us as a test bed to experiment. And in fact, I feel that a lot of people are considering us an experiment in the proof of work change. I'm seeing more talk, and I'm not going to get into any debates about it, but seeing more talk about people saying maybe we should change the proof of work on Bitcoin. There wasn't that much discussion of that before, not as much as I'm seeing now. So I think maybe we're having an influence. We've demonstrated you can make a fork of Bitcoin with a different proof of work. And it doesn't mean the end of the world. It's doable. It's possible. People will adopt it. People will mine it. It'll become stable. It'll be on plenty of exchanges. We're serving as a test bed for the crypto space. Our development will help others, and others' development will help us. We're the friendly fork.
Okay, the friendly fork. I like that. Is that something? Do you guys come up with that? I haven't heard that before. That's a nice.
No. I think Robert initially came up with that during the run-up to Bitcoin Gold's launch. But yeah, it's definitely intentional. And it's something we've been really trying to express, especially in the back channels as we work with other Coin Team developers.
Great. And that actually kind of leads into my next question, which was, do you feel like this is going to be a winner-take-all type of scenario? Like, you know, 2 years, 3 years down the road, and obviously no one has a crystal ball, you don't either. But when, you know, people are asking you, so, you know, what's going to happen to Bitcoin? What's going to happen to Bcash? Do you feel like all of these can kind of coexist together? Do you feel like there's going to be a, you know, winner take all, or that there's going to be one or two, maybe Bitcoin and maybe a fork that's going to win? Or do you feel like, you know, all of these that are going to come out, that they all have, if they have the certain properties or certain features, that there's going to be fans for each one? It's going to be, you know, like the NFL, that there's multiple teams that are all playing together that have different players, but, you know, they all coexist together.
Yeah, and they have separate leagues, but they come together for the World Series at the end, or the the Super Bowl at the end. Since we're talking so my opinion is that there won't be a winner-take-all situation. I believe there will still be multiple cryptocurrencies because some of them are really dramatically different. If you look at something like a Ripple, it's nothing like a Bitcoin.
Sure.
It's very different. But when you talk about things like Bitcoin
Just
versus
Bitcoin.
Bitcoin,
Yeah,
sure.
just the Bitcoin and the forks is what I meant.
Sure, sure.
Okay.
I don't see a winner take all there either. I think Bitcoin Cash will have its fans and Bitcoin will have its fans. Personally, I have a preference for Bitcoin. Obviously, I work for a team which is emulating Bitcoin, not emulating Bitcoin Cash. But we're also doing something very opposite to Bitcoin Cash. And here's where I think there might be a problem. If your sort of core concept is that we are the actual Bitcoin, then you might sort of be forcing a winner-takes-all situation. That might lead to so much long-term antipathy that you sort of try to force it into a winner-take-all situation. I don't think that's likely to happen. I think that in the end, people will be tired of that sort of marketing confusion. And I think that people who really just honestly think large blocks is a better technology and the things that are being built on Bitcoin Cash are a better technology, will use that technology, and that's fine. And the people who agree with what Bitcoin is doing, they'll use that technology, and that's fine. You know, maybe Bitcoin will turn into the store of value, and BTG will be the small, quick transaction coin, and Bitcoin Cash will be, well, I'm not sure. But you know, we can have different purposes, and we don't get to decide those. These are supposed to be free open source projects. So the market decides what Bitcoin should be. The market decides what Bitcoin Gold should be. For all I know, people decide that Bitcoin Gold is such a value now that they start holding it as a store of value. And when it appreciates, they decide to stick with it. And Lightning Network is taking off like crazy on Bitcoin. Maybe people decide the way to do quick, easy transactions is Bitcoin's Lightning Network. Who knows? It could flip entirely. People could be doing their quick transactions on Bitcoin and store of value in Bitcoin Gold. I don't have a crystal ball like you said, but what's more, I will say that I've been around the tech space long enough to know that things are going to happen differently next year and 5 years from now than whatever we think, because the people who get to decide aren't in the space yet. You know, there's a small rate of knowledge about Bitcoin in the public sphere, never mind adoption and utilization. As that grows, it's going to make massive changes in how people work with the space, how people see the space, and what they choose to do with the different projects and the different assets they can hold. It'll be completely different than anything we expect 5, 10 years from now. So rather than try to predict what it is and then build towards a prediction, we're just trying to build a good, stable project with lots of libraries available for people to develop on, the most robust, bulletproof, stable thing we can make to allow for whatever comes next to do its thing for the world.
Got it. Very clear. Excellent. You know, you really kind of, I have, you know, looked at Bitcoin Gold. I've looked at your guys' charts. I've looked at, stayed on your guys' Twitter. But, you really laid out just kind of what your guys' feelings towards Bitcoin and, the other cryptos are, as well as also kind of what your guys' goals are, a lot more clear than what I had read. So, that's why one of those things, for everyone that's watching this, we say, go out, find out who are the people that are the backbone of these tokens that are really taking these things on. And I can tell that, you are very passionate about Bitcoin Gold. I can tell that, this is something that you guys aren't just doing just because you want to do it, you guys have nothing better to do, or that you want to, kind of butt heads with somebody else, or try, like you said, to do some type of money grab, based on what you had explained as far as how you guys are set up and actually what's written in the code, that just isn't possible. What I'd like to know is what do you think that is one of the biggest misconceptions that people have about Bitcoin Gold and what the real reality is?
Well, quite honestly, I think you just spoke about the biggest misconception. Sorry. I think you just spoke about the biggest misconception and what the reality is. There are a lot of people out there who think that every fork is a new coin and then a scam money grab. And neither is the case with us. We're going to have a fork in a couple of days, which does not create a new coin. People need to learn that fork means upgrade. Fork means modification. Fork doesn't mean new coin. That only happens if there's a tragic accident that causes an accidental coin split, or if it's done intentionally, if you set out to create a new coin and stand up a new network, or, in the case of Bitcoin Cash, if something's very contentious and part of the space decides to go one way and part goes another way. Although a sort of forced by the way they did the EDA. But still, the idea is if there's contention, a community can split and go two directions. I suppose Ethereum is the better example of that. When Ethereum decided to take action after the DAO hack, there were some people who felt that should not be done. They stayed with the old code. We now call them Ethereum Classic. So contention in a project space can lead to a split and a new currency, but that's not inherent to a fork. I think that's the biggest misconception I hear. People think every fork needs new coin. In fact, every message we put out about the current upgrade, we're calling it a network upgrade being enacted via hard fork. And the first question we get is, will there be a new coin? No. So we always put in the message, no new coins will be created, but people still get confused.
And the main benefit of this network upgrade is going to be what?
So the two primary benefits are that the new version of Equihash that we use will not be capable of being run on an ASIC miner. So these new ASIC miners being sold on the market will not be taking away mining ability from our GPU miners, and our mining and our coin rewards will stay distributed broadly throughout the world to anyone who has a computer with a GPU who wants to mine. One thing to remember is no matter how good an ASIC is, you have to spend money to get it. But if you've got a computer with a decent graphics card, your CapEx is zero for you to start mining Bitcoin Gold. You've already got the hardware. So, I mean, that's what allows people all over the world to get involved and become part of the network effects of our system.
No, there's something to be said about that. I mean, as far as just the overall community aspect, that you're basically saying, hey, we want to make Bitcoin Gold available to the general public. That if you don't have hundreds or thousands of dollars in order to buy, these, expensive ASICs and to really set up and all the tech background, you can, use a regular computer. And the idea is that you guys are, as they are trying to bob, you're weaving, as far as when it comes to these things, it's like, oh, you made the ASIC so that it can mine Bitcoin Gold now. Well, enjoy for the next 2 days, or whatever it is that you're basically saying that we are going to continue making sure that our vision of having a decentralized Bitcoin will continue to do so now and in the future, and that's the main upgrade for the fork that's happening.
Right, and also nobody is prevented from getting a lot of GPUs doing more mining if they want to do that. But the fact that they do that will not force the individual with one GPU to be excluded. Nobody's getting excluded. That's part of the vision we'd like to support. The other important thing that the change of algorithm is providing is some security and safety. There was a lot of news last year in mid-May. There were 51% attacks done on Bitcoin Gold. Well, technically, they were done on the Bitcoin blockchain to do double spends to attack exchanges. So they were really attacks on exchanges using Bitcoin Gold. And they were doing that using rented hash power. They may have also had ASIC miners. We can neither confirm nor deny that. There's no way to prove it. But we do know that rented hash power was a big part of the equation. And if there were ASICs involved, they were channeled through the rentals. The existence of these rental markets for Equihash, which is used by multiple coins, means that there's a large pool of power, and all the players, or most of the players, are relatively small. There's always one dominant player in any market. Someone's bigger than the others. And in the Equihash space, that's Zcash. So Zcash is relatively safe from a 51% attack in Equihash, but all the other coins are vulnerable, every one of them. So by changing to a different algorithm, which in this case is also personalized, there are other coins using Equihash 144.5, I believe SafeCoin is, I know Bitcoin Z is, BTZZ, and there are a couple of others who are escaping my mind right now. But we're all using personalization strings to mean that a miner configured for one can't be redirected to another. And that redirection is what's done by the rental markets, and that's what allowed the criminals to rent massive amounts of hash power on a moment's notice to create a 51% attack to double spend against an exchange. So by changing the algorithm, adding the personalization, getting out of that big pool where we're a small fish, we move to another pool where we're the only fish, at least for now, and we add a strong measure of safety for our partners like the exchanges. We don't want them to be at risk. They're a critical part of our community. Of course, there wasn't that much risk for individuals, like say a merchant running a store, to be double spent, because the cost of mounting an attack is very big. It doesn't pay off unless you're capable of, making a, $250,000, $500,000, $750,000 transaction. If you could double spend that with a party who's going to let you withdraw something else, an exchange can let you trade into something else like Bitcoin and withdraw that in a couple of minutes notice. If you can con that partner into letting you pull money out, then your BTG double a spend can net you a big criminal profit. But that's not really a risk for someone who's only going to sell you a cup of coffee or a meal.
Right.
No one's going to spend thousands of dollars to double spend for a cup of coffee.
Right, totally. No, well put. Excellent. Ed, you shared some really, really good info today, and I know that you can't speculate on Bitcoin gold price. I know that that's a very much an overlapping type theme for most people that are involved in on a coin, and so I won't ask you that. I will ask you though, what do you see December 31st, 2018? What is going to be the general vibe? What do you feel? We're now coming up to the middle of the year. This bear market has lasted, I think, a lot longer than what most people have anticipated. 6 months from now, or roughly that time, what's the crypto space looking like? What's the sentiment?
I think 6 months from now, the sentiment will be quite positive. It has been a long bear market, but that also means it's got to be closer to the end. If past is prologue, it's going to come to an end. And the fact that it's been long means the end is closer. Also, what I think is going to happen is, remember, last year's mania, last year's speculative bubble preceded this bear market. So it looks especially bad, but it's not just that we had a bear market where things went down. We had an absurd bubble right in front of it. Some people may dislike me saying that, but I think it's the case. $20,000 BTC was not appropriate in December. That was a bubble. So the bubble burst and we have a bear market. That looks really bad. But all those people who got in during that bubble, all those people who were holding cryptos for the first time, they're experiencing their first crypto bear market. So what we're going to have in December is a huge number of people who've experienced firsthand for the first time a crypto bear market. And the people who held through the bear market and didn't continue dumping as Bitcoin fell to 7,500, 6,000. Well, we didn't hit 5,500, so I can't say that. But the people who didn't keep selling and driving prices down are the ones who are going to be looking back and say, yeah, I know how to survive a bear market. I didn't panic sell. I didn't drive prices lower by selling. In fact, that's something, I don't know if I mentioned this to you earlier, but I hear a lot of people saying that. I see it online, but also personally, I've heard people say, I'm positive about crypto. I'm pro Bitcoin. I'm just selling until the market stops dropping. That's dead wrong. The market is dropping because you're selling, and the market will stop dropping when people stop selling. They've become part of the momentum that drives the price down because they're panicked that the price is dropping. It's the people getting in now that are the smart money. That's why every time we've touched 6,000, we don't go far below before money rushes in, because the smart money sees that, in my opinion, the smart money sees that anything below 6 grand is clearly undervalued for Bitcoin. The money comes in, the price comes back up. At some point, the bear market sentiment will be behind us and things can start moving up again. December, it's all going to be past us.
Beautiful. Love it. And that's some confidence right there. And for everyone that's listening, Ed is no, newbie in this. He has a very strong tech background, has lots of experience in mining as well, and is the director of communications for Bitcoin Gold. So, Ed, thank you very, very much for everything that you shared. Definitely dropped some of that knowledge on all of us here. at Crushing Crypto. So again, thank you very much for what you shared. I look forward to, it'd be great to jump on a call with you, in the future, maybe in December, and when the sentiment comes down, and be like, Ed, you were right, buddy. Or be like, Ed, what the hell is going on, buddy? This is the longest bear in history. No. But it'll be good to kind of see where things are. But I have to agree with you on the sentiment, and those people that are holding on. Those are the people that we want in the community, anyways. The people that just jumped in because they thought that they're gonna get rich, and that they just were. It was purely on the speculative side, and they didn't really have any type of true desire. It's almost good to have those type of weak hands out of it. So I have to agree with you. So, Ed, thank you very much. And for everybody that listens to this, as you guys can see, we bring on top-notch people, top 100 tokens. Right now, Bitcoin Gold is top. It looks like top 30 token, looking at coin market cap right now. So, for you guys, for the short amount of time that you guys have been around, you guys have really, obviously created a lot of buzz, and you have a lot of fans, and you said over 100,000 people that are involved in your network. So we'll make sure to again, get this out to our people, and hopefully for everyone that's listening, you guys know that, learn about the teams, learn about the tech, learn about who are the people that are actually putting it together. If they're not willing to get on camera, if they're not willing to, talk, if they're, so techie that they can't communicate and they just want to sit and pound, their keyboard all day and not actually communicate with their community, be careful of investing in those type of tokens. So, Ed, appreciate you jumping on the line with us. And
the pleasure is mine, Colin. Thank you so much for putting this together and having me on. And I look forward to having a second discussion in December where we could both gloat about the fact that we hung on.
Let's do it. Excellent. All right, everybody. Hope you enjoyed it. Ed, thank you very much. You the man. We'll talk to you later.